Good morning, Paul Georgie from Allendale. It's December 13th, Thursday morning, and first thing out of the chute here this morning, we got the USDA weekly export sales numbers. Corn, trade was looking for 100 to 300,000 tons. It came in at 272. Wheat, 350 to 550, came in at the high end of the range there at 573. And soybeans, they were looking for 600 to 800. We sold 1.32 million metric tons last week. So that's a big number for soybeans. It's caused a jump in 3-4 cents jump in soybean prices here after that report. The news out of China, the price there of soybeans overnight were just slightly higher, up 4 to 6 cents. The big news now is tomorrow morning's report from NOPA on their crush number. The trade is continuing to increase those numbers. They're up to an average range now of 147 to 165. That number comes out around 7:15 tomorrow morning. Processor demand continues to be very good for soybeans. Their bids in Central Illinois is 25 over. Up in Minnesota, we're at 35 over, trying to drag beans away from producers up there. So strong demand, positive crush margins are keeping the soybean market very hot. At the Gulf, we've got good, strong basis as well for soybeans. However, corn basis at the Gulf continues to sag a bit here, with down 3 cents yesterday, and just not seeing that demand that we'd like to see for corn. The South Korea, one group in South Korea bought 230,000 tons of corn and announced it overnight. It was a tender that they didn't even include the U.S. They bought it from South America and from South Africa. There's another 140,000 tons of corn that a South Korean company is looking for, and they are looking to the U.S. for an April-June time delivery. So hopefully we get an announcement on that here in the next day or two. Tomorrow is the last trading day for the December contracts in grains for corn, soybean products, and wheat, and also the last trading day for December lean hog contract. In the livestock futures, we've got hog markets mixed here this morning. Cattle are a little firmer. The struggle is the division now that we see between the futures and cash prices. The bids in cash cattle are still 121, offered at 126, 127. The cutout values, not much change there, down 39 in choice, up 67 in select. The futures price running at around $127 right now. With the disparity in the cash, we're seeing deliveries come in here. We had 47 deliveries yesterday or last night, 25 retenders for the second time, which means somebody's willing to pay $3 to get rid of the cattle rather than to slaughter them themselves. So that not an encouraging sight in itself. So packers are still playing tough on these prices as cutout values continue to remain very poor for the packer. Also, closeouts at the feedlot level are not very good either. So we need to improve this product in order to sustain a higher cash price and improve those margins for the packers. Pork numbers down 83 in the cutout value yesterday. We've seen a huge surge in hog prices yesterday on fund buying, technical buying. It seemed like yesterday was the day for hogs. Monday was the day for cattle to run sharply higher on. A lot of it attributed to the stimulus package that the Fed had announced yesterday, expecting to direct their efforts now to improve unemployment, and that has surged or caused a surge in pork prices, and we'll have to see if that follows through, and we'll watch that very closely as cash and futures are kind of wide right now. One or the other should adjust here in the next week as we go forward into the end of the year. Traders are continuing to watch the physical cliff negotiations, which are certainly at a standstill at this point. Looks like it's going to drag until the end of the year when that decision has to be made. So if you got any questions, give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.